Well, good afternoon, everyone. Good afternoon. I hope you enjoyed your lunch. And welcome back to, still a few people coming in. Thank you. So, welcome back. I hope you had a good lunch and are ready for this afternoon's business. And brings us to session 2. Is Europe setting unrealistic targets for itself? So, the European offshore wind scene. Now, I said earlier we're going to have some great expert commentators and analysts talking to us throughout the day, and this is no exception, because I'm going to hand over now to David Linden, who is Head of Energy Transition at Westwood Global Energy Group. He is the industry's foremost commentators, and he will be giving us his insights into the European sector. And then he'll be hosting a panel. So for the next hour or so, I'm delighted to welcome David to the stage and to leave things in his capable hands. David, please take the stage.
Hi everyone. Thank you for the very generous introduction there. Very much appreciated. Great to be here. I thought I'd start with a show of hands, actually, if I may. Do you think we are setting too generous targets or too complex stretch targets in Europe? If for the yeses, why don't you put your hands up now? Let's have a look. Oh, it's far too complicated. Okay, for the noes? Okay, there are more yeses than noes. Okay, so I'm assuming that means we think the task is too difficult. So that's what this hour is really about, is trying to get a bit more context around Europe. I will do the kind of relatively factual question-asking bit for the next 15 minutes, just to give you a bit of insight as to where we are, what the questions are that people are asking, and then we will get to ask some of those questions to the panel, who will have the more difficult task of answering them. And you'll have a chance to ask some questions as you go as well. So, as I said, I'm going to look at the state of play. I'm David Linden, Head of Energy Transition at Westwood. Westwood's a market intelligence and consulting business. We've done many, many years in the offshore sector, and as you can imagine, have been dragged into the offshore wind industry as a result of that. Well, don't ignore the disclaimer, but you know what a disclaimer does. We have a tool, a wind logic solution, that essentially people subscribe to get access to our data, insight, and our people. And a lot of what you'll see today in this presentation stems from that. So I think this comes as no surprise, and it does feel a bit like a broken record maybe today, that Europe has set itself quite a significant ambition. And it comes as no surprise, I guess, to folks in the room that Europe is, in fact, the second largest market in the world. It's mainland China that's the largest market. Europe's almost at 50% or so. But while it is essentially two markets and a little bit right now, the ambition that has been set in Europe, and that's very clear, I would say, or relatively clear, we can discuss and debate that later, has been set by a series of countries. So apologies for the text size here, by the way. It didn't quite translate so well going into here. So I don't want to blame anyone, but it's come through slightly smaller. So if you need your reading glasses, this is your moment. But you've got a series of countries, but also grander sort of regional agreements that have come into play, and obviously a lot of them being discussed quite recently. So you've got the Ostend Declaration, which gets us to 120 or so gigawatts. These are essentially North Sea players, including UK. 120 in 2030 and 300 in 2050. And then also the EU itself, where you've got some binding and non-binding targets that are in there as well, which are similar but slightly different as such in terms of offshore renewables as well. So this is a story of big ambition from, I would say, a relatively still small base. We're looking at a 4-fold or so increase by 2030 and a 10-fold increase by 2050. That's a lot. So you're going to need a lot of countries, not just the core ones we're used to talking about, to get us there. And so these smaller, sort of what we call new and emerging markets, and they're usually what we call markets that are just under a gigawatt or so at the moment, they are starting to make much more of an inroad in the market here. So they'll be around sort of 15% or so, or slightly more than 15% by the time you get out to 2030. But these markets are evolving. They are trying to figure out how to deploy offshore wind. They're trying to figure out what their leasing arrangements should be. They're trying to figure out how partnerships should work. And so what you're getting is a situation of, better, depends on how you look at it, but fragmentation in the market, not just in terms of here's the traditional North Sea core that I'm used to, but different players as well in that market. So you're getting a lot more diversity. And I think it's often understated, but these are essentially going to be the countries that are going to get you to your targets. It's not just your core that we're very happy and interested in talking about. It's worth talking about the fringes because it's the fringe that's going to get you there. So, but Europe as a picture at a macro level looks extremely positive, right? So if you look at the new capacity growth, so this is just new capacity growth from now over the next 7-8 years or so, is essentially going to be the biggest capacity growth in the world, aligned with China essentially in terms of size. The spending, so if you're in the supply chain and looking for your next contracts, that's looking exciting. It's by far the biggest, fastest growing market from there, with other regions like APAC catching up, etc. And the leasing side of things, as was mentioned this morning, is looking very sizable indeed, and specifically planned in Europe, is a large-scale opportunity set. So there's a lot of positives that you would think about if you look at this market. A couple of things to note, though. So, for example, if you look at the middle chart in particular, you look at the you have a laser. Do we have a laser? Yes. We've got the mainland Chinese market doing this. Now, if supposedly it's doing this, why is it doing that? Well, it comes down to costs, essentially. So you've got a divergent picture of costs happening in Europe, where we've seen things rising, while you've got a place in China, a situation in China, where there's costs have been falling almost in a mirror image kind of way. And that's just based on recent, or the last few years of turbine pricing that we've seen. So that's one side of things. The other side of this, of course, is that we've been, as a market intelligence provider, we've been steadily revising down our forecasts for this part of the world. So just this year, we've taken out 25 or so gigawatts for Europe to be reached by 2030, which is pretty near term, to be frank with you. So already a whole chunk of the market we see is slowly starting to move to the right. And what does that mean? That means we're going to miss targets. We're going to miss targets across pretty much all countries, and we're going to miss targets across all of the bigger declarations that we've made. So I think we're projecting that on the kind of Ostend side of things, we're looking at about 85% or so of the target being hit, and I'm rounding numbers here. And then for the EU, it's around 75% of the target that's going to hit. And that's partly because larger countries have not essentially been able to do the build-out that they'd like to do for various issues. We'll come to that. So the UK, Germany, Netherlands, for example, the traditional big core that we've seen that's going to drive volume. But it's also a lot of the smaller markets that are simply not keeping pace to the targets that they set themselves at this stage. So there are many nuances around all of this, of course. But for example, if you take Denmark as an example, which does surprise people when you look at our numbers and you look at what's happening there, essentially there's just been a lot of hiccups along the way in terms of reaching the targets and the time frame we're going. So the ambition hasn't gone away, but the time frame has shifted to the right. Now I should highlight, of course, that, and if you're in one of these countries and going, well, that doesn't seem quite right, there are, of course, different ways of counting targets. Some will say if one turbine's in the water, that's a whole project on. Someone else will say you need the whole wind farm, needs to be producing, etc. So there are nuances here, but I think it's an important warning signal as such just to highlight that essentially Europe as a whole is going to miss its targets. Now, we've talked about a lot of this, but I thought it was useful just to put it in again because it does apply both to Europe and the world. And I thought, sometimes it's good to talk about Europe in isolation, but realistically, this is happening globally, and this is impacting investment across the globe. So we've seen two things, right? Two questions that are being asked that are causing a bit of an inflection point. Have costs risen too high? And has the support to essentially meet those costs gone too low? So left-hand chart here is really a chart that came from a study that we did earlier in the year. It was published around June time, which was our cost inflation study. If you want to have a look at that, we're happy to share that with you. But really highlighting the kind of percentage increase towards the start of the year that we were seeing, sort of 10 to 20%, which is now probably looking more like 30 to 40%, to be fair, in terms of cost impact, which is adding 280 billion or so to the outlook just for the next 7 years, or decades, excuse me. At the same time, we've done a lot of work around the analysis as to where the kind of trend around support has been. And the question we were asking is, have support levels fallen too far? So, there has been a trend downwards. There's been the talk around negative bidding, all those sorts of things. And obviously the AR5 failure is probably the most obvious example of where that hasn't successfully met, essentially, this left-hand side of the picture. So right now, essentially, if I'm simplifying the world, you've got this going up and this going down. Pretty simple maths. You're not going to make it work. So what impact is this having? We're seeing FID and investment hesitancy. There are obviously some folks who were on the previous panel talking openly about that and why that might be. There are still projects in limbo in the UK who are sitting there going, well, hang on, I was in this environment, now this environment, but I'm not getting that benefit that someone else was getting. Inchcape, Hornsey 3, those types of projects. You've seen project delays and cancellations. This is not the USA. It's not as bad as that at this stage, for sure. But you are still seeing issues in places like the UK, even Poland. Luckily, we have someone from Poland on the panel just afterwards. We can talk about that. Portfolio recalibration. So again, you've seen a number of different developers, but also supply chain players essentially recalibrating their portfolios, working out where do I think I can actually truly make money, refocusing, almost reshoring in some respects. I think Norway is an interesting example of that in a moment if you've seen any of the tender lists have come out. Routes to market are changing. So the narrative around how you get your electrons to market and what you do with them is changing. So people are trying to find different ways to add value to what they are doing, whether that's integration with existing operations that they may have, whether it's trading, whether it's the future is all hydrogen again, those sorts of things are certainly popping up again. And also people probably now thinking more PPA and merchant risk maybe is more attractive, but it's a question of whether you can take the risk. So the world is in flux, and a question that I find myself asking is something like the AR price, while rising for next year in March 2024, 66% rise. The question is, that's great, but is that really enough? Is it really about price, and it's 66% looks great, and that's the answer? Or have we got more that we need to talk about? And we'll deal with that in the panel a little bit. And of course, the other side of it, it's not just about costs and revenue, it's also about delivering everything that you wanted to deliver. And I don't want to spend too much on this because we've got some great folks on the panel afterwards who can address some of the questions around this. But essentially, 90+% of the market in Europe has been delivered by Europe or European-based manufacturing facilities. It depends on what your definition is, but that's important. It's been an insular-focused market all this time. And so you've got a situation where you're saying, well, let's go and take that to the next level. Let's go fourfold, let's go tenfold. Is that really appropriate at this stage? Can these guys deliver? There's some interesting discussion in the previous panel that will question that. But also at the same time, it's not just about Europe for these companies, right? They also want to go abroad. They want to look at Asia. They want to look at other parts of the world where they see opportunity. And so the question then comes about, yes, we've got a local supply chain, but that supply chain isn't just looking at Europe. It's looking globally and the opportunities there are. So what's Europe doing to essentially support the deliverability is fine in one way, but if they've got options elsewhere, they may very well go there. So the way we've been working with clients on our side from the Westward perspective is really helping to deal a lot more with risk and thinking about the risks of the pipeline you see out there. It's all very nice, seeing nice charts flying up into the air and going in different places and saying, wonderful, look, we're going to deliver all this, and next year revising it because it hasn't quite gone right. So we've been developing what's called a project certainty assessment, and so for us that's about assessing each of the individual projects that are out there that essentially looks at a series of criteria. Whether it's a developer, the lease that they have, the routes to market they're looking at, etc. And then risking those projects of whether we think those projects, or how likely, should I say, those projects are to take FID. And that's really important in my mind because this is markets become so much more uncertain. You need to understand the risks around the projects you've got in front of you to understand how likely it is that this pipeline and these projects will even be deliverable. And with the last few minutes that I have, or 45 seconds that I have left in my slot, that always goes according to plan, of course. The question then becomes, if you take it in the words of van der Leyen, how do you deal with this unique mix of challenges that Europe has? And we heard from the European Commission this morning, often the blame gets put at the doors of the government and the regulator, but they have a pretty big inbox of requests that the industry is placing to them. They're asking for, please, we need to do decarbonisation, but also have an industrialisation policy. We need to make sure that permitting becomes easier. We need to make sure that you invest in the grid. You need to make sure that the auction design is fair and you have competition, that the supply chain is resilient, sustainable. It's exhausting almost, right? There are so many things that you're trying to solve. And the question is, can they all be solvable in the time frame that we need? Now, I'm actually quite a big fan of the EU wind power package. I'm glad someone did the run-through for me this morning, so I don't have to give you all the details around that. But it does try to solve a lot of problems. And one of the questions I'll be asking the panelists after this is, well, how do they feel about this? Is this the kind of the panacea? Is this the way it needs to go? You need to try and solve it all through this? Or should this be down to developers, really, who go, look, actually, there are other opportunities elsewhere, or actually, I'm going to make a commitment of X, Y, Z. I need to sign framework agreements. That's the way forward here. I shouldn't be relying on governments to essentially hand it to me. So just to sort of summarize it with 47 seconds over, Europe is going to be at the core of offshore wind, right? It's not going away. It's going to deliver not through just its core markets. They're massively important to achieving ambition. But at the end of the day, it's emerging markets that are really going to also help get us across the line. So don't forget about them. And actually, they're a much earlier stage of development. So they'll need support. There's little doubt in the ambition of offshore wind, but we're behind target. And we're going to see lots of exciting stuff happening sort of post-2030, so several gigawatts of energy coming online if all goes according to plan. But we are unfortunately a little bit behind. Question is the business model right? Is it working right now? And it's really about understanding the risks, managing those risks, and trying to deal with those unique mix of challenges. The question is, what's the best way forward? Thank you. So, thank you very much. We now have a fabulous panel of individuals. If all of you see your face on there, please come up to the stage and we can start. If your face is not on there, please don't come up.
Emily, nice to meet you. Louis before.
Are we on? Are we on? We're not on. Oh, yes, we are. Hello.
Hello, everyone. Thank you very much. Just for the audience, and apologies if you got the cheap seats and can't see me, but just for the audience, I have an iPad here which you can ask questions through. So if you've downloaded the app, then what you can do, there's an opportunity to write in questions there. Obviously, there's also roaming mics, so you're more than welcome to put your hands up and we can answer some questions as we go. I'll try and leave some time at the end for sure, but I'll also be checking the iPad on a regular basis as we go. I thought, as I haven't introduced you at all in any shape or form, if we could just take 10 seconds per person, just to sort of name and job and go from there, if that's okay. Andreas, we'll start with you.
Thank you. Andreas Austin with DNB Bank, working on energy transition solutions. And DNB is engaged in financing and arranging capital throughout the whole value chain for offshore wind. So both on the production side as well as on the supply side. And particularly on the supply side, DNB as a maritime bank and has history in that has been quite active over the last years to arrange some of the capital that is needed to see more assets coming into the industry.
My name is Arkadiusz Sekściński. I'm a CEO of PGE Baltica. PGE Baltica is a subsidiary company of Polish Energy Group, the biggest utility in Poland. And PGE Baltica is responsible for development of offshore wind farms on the Baltic Sea.
And my name is Emily Sakerson, and I head offshore wind development OX2, a Swedish company which develops, constructs, and operates onshore and offshore wind farms. I have the privilege of leading the development of 6 offshore wind farms in Sweden at about 12 gigawatts in total capacity.
Thank you. My name is Wilfried van der Sip. So I'm working for Total Energies. I'm director for business development for Northern and Eastern Europe. So you all know Total Energies, multi-energy companies. Historically from oil and gas, and now moving towards offshore wind from some years now.
So my name is Javier Garcia. I'm the responsible in Iberdrola for the offshore business in Europe. And my background is engineer. I have been involved in different business development activities in onshore in Spain and then in offshore. We started our first solo project, Vikinger, in Germany in 2012. And now, looking to the challenges in Europe, and you were mentioning, David, that probably we will not be able to deliver everything that is expected, but trying to gain as much as possible, yeah?
It's the challenge, isn't it? Challenge. Thank you, Javier. Perfect. Okay. We've got about 40-ish plus minutes or so here to try and go through and try and unpick what is quite a complicated situation in some respects in Europe. And you know, the question is about trying to remain attractive, right, as a market, trying to keep its scale and grow. Maybe just to help set the context a little bit, Rolf, if I can first come to you. You know, there are multiple objectives. We've talked about decarbonization as a whole for offshore wind, but with all the different countries we've got there with different targets and those sort of things, how do you see that sort of the suite of objectives that we're seeing for offshore wind in Europe, just to sort of help set the context first?
Yeah, thank you. I think we have seen that from the morning. We see first in the global picture, offshore wind is part of the global objective of renewables. We see the need of having more renewables all over the world, and the ambitions is set at a high level at COP. And next week we'll see new targets of tripling the renewables at the COP28, and then it's reflected into ambitions in Europe for multi-energies, renewables, and after with the 45% objective of renewable, and then after in targets of offshore wind. So each country is taking a part of this offshore wind target according to their capacities. Of course, you have countries which are more into solar, more into wind. The Northern Europe are more into wind. And then after, it's they are taking the opportunities of developing this offshore wind for other reasons. Of course, the offshore wind is a scalable source of electricity. It's close to the load centers of the coast. Today, 40% of the population in Europe are living close to the coast, so it's close to the load center. You also have the need of developing the supply chain, which is an opportunity view more than decarbonization. It's stabilizing the grid because it's a good complement to onshore wind and solar. All in all, offshore wind has its place into the renewable mix. It enables some countries to develop talents, to develop the rest of their industry, and as well to support other sources of energies. You mentioned other possibilities like converting the electrons into hydrogen, methanol, the green electricity in general. So it's a combination. Each country will have different objectives, even if they don't really need intrinsically offshore wind, like countries like France, for example, where I'm coming from. You have some opposition from people saying we should only go for nuclear, and it's enough with 80% of the mix covered by nuclear energy. But France is taking on board offshore wind because you have a large coastal region, and it's helping the overall other countries in Europe as well to develop offshore wind in France. And it's a good combination with nuclear. So all countries are taking their part of it. The ambition is there. It's great to have an ambition. It should not stop because it's setting the path for the future development.
Okay, thank you. So, but I guess part of it is there are a number of different, almost competing objectives that countries have, right? They have an energy policy and trying to figure out how offshore wind fits in that. And that's an interesting point. And from the Polish perspective, in that sense, how does offshore wind fit in there? I mean, we talked about some of the emerging markets playing a key role. Mm-hmm. Is it just because that's the only option that's there, or is it actually this is about industrialization? And I think it's important because it does impact how you think about what you do with offshore wind going forward. But
exactly, I like what Wilfred said about these different perspectives. I really want to emphasize that in Poland we really want clean energy as such, because today we have so much energy from the coal that it's no question that it's really too much, and everybody knows that the transition takes time. But it's very good that we have started onshore wind. PV, of course, is good, but we cannot get our targets, our goals, without big projects like offshore. And I want to really underline that this is the offshore wind is not just a business. Of course, the project must be profitable, and all these challenges we face globally hit us as well. We have projects pretty well mature with our partner Ørsted, and still we have this extra perspective that we have transition of our energy mix. We have also on the top of our priorities, our energy security. Poland is not dependent only on coal, but also gas was a very part of this mix. By the last year, we were supplied from Russia each year 10 billion cubic meters of gas. So in our situation, it's not only the business; it's also sovereignty, independence, and so on. And I like very much that we discuss about Baltic, that we discuss about this emerging market, because there is a very big support. No matter who governs, yes, the direction is only one: to support it, yes, to make sure that these projects will be delivered by us with our partners. That's why there was also a second phase. We have our Polish energy policy set up on the government level, which says about more than 11 gigawatts by 2040, 6 gigawatts by 2030. So that perspective, which I am trying to share, is good if it's also taken into consideration by each of company which is interested in this market, because it's kind of extra perspective which is really important for us.
Great, thank you. Yeah, so there's a kind of government decarbonization, energy security perspective, and it's kind of how the developers also balance some of the efforts with that. But okay, so part of what we've discussed, I guess, some of this morning already is about how do you ensure that people actually take, are able to get access to a lease in that sense, to be able to build? There we've talked about predictability, et cetera, et cetera. The question is, there's a bit of diversity. I think we heard earlier that we should be trying to sort of become more homogenous in the way that we do this, right? Create more standardized rules, approach things in a more standardized manner, have much more predictability in those sense. Javier, if I come to you, what's your view in terms of how we should be setting things up in Europe? Should this be a kind of 100% transparent portal, everyone knows what they're doing when, with which rules, and they're all pretty much the same rules across Europe, or is diversity king here?
Well, I think that, like Iberdrola, we, like developers, need to take risk, and we need to develop projects assuming managing the risk. Yeah, I mean, securing that we are delivering. Yeah, I mean, we cannot play with the game of our shareholders and people owning the company. Yeah, looking to the auction, it's evident that we need to ensure that we need to accelerate all the development of renewables in general, and specifically for offshore wind. Yeah, there are, I mean, we can speak about what we want and what is somehow damaging the award of the project. I mean, from our point of view, all this scheme of negative bidding is causing a huge impact on the auctions, yeah? Because it's extracting value from the renewables in general, specifically in offshore. Yeah, there are schemes where there is a direct payment from the promoter to the government in order to secure the development of the site, but there are other schemes that are damaging somehow the offshore wind. Yeah, for example, contract for difference is a scheme that is initially supporting, but depending which are the expectations of the price of the market and the caps you define, this can become in a negative binding. Yeah, these additional requirements for promoters in order to build electrolyzers, system integration, all this is causing inefficiencies in all the process. Yeah, so we need to be aware about the impact of all this. Yeah, because in the end, if the cost is higher, we need to look the way of solving this inefficiency. One way is making pressure on the supply chain. Yeah, and that has been working up to now. I would say up to the last year. Yeah, we have been keeping expectations of reducing the capex value of the projects, and that has been permitting us to take part in different tenders. But it's clear. I mean, you look to results presentation, Siemens Gamesa the day before yesterday. Vestas is announcing to start black color in the P&L for the end of the year. So they are having strong difficulties in order to continue delivering as expected by the market. Yeah. The other option we have, I mean, we need to support the supply chain, not to squeeze the supply chain in this moment, but at the same time keeping competitiveness. Okay, because in the end we need to not to lose the global overview. You mentioned very clearly we are leaders in delivering offshore wind all around the world, but we are doing competition. And I would say unfair competition if you look to the States or to China. Yeah, so that's something that needs to be considered. Yeah, but asking about how to cover this risk of additional cost. Yeah.
Yes.
Prices. Yeah. I mean, how you reach a price that is making sense. I mean, if we will be happy to have very high prices, but it's not making sense to have prices that are jeopardizing in the end electrification and the transformation of the electricity in a green electricity and helping in a fight against the climate change. Yeah? So we are concerned about prices. I mean, I think that the price should be according to which are the requirements of the sector, but not to have easy money, because in the end it's against the development of the sector. Yeah. I wanted to have some bullets because I can't deviate very long for the main topic. Yeah. But when speaking about specific criteria for auctions, yeah, I mean that we need to be for sure transparent, measurable. We need to be non-discriminatory, objective. All this is pretty clear. Yeah. I think that we need to be very well aware, and France, for example, is considering this opportunity of not awarding all the capacity to a single promoter, but just to diversify the portfolio of companies that are being awarded, because in the end, it's a clear the risk. I mean, if you are concentrating all the risk in one single company, the risk of not delivering is very high. Yeah? And I think that other important topic is to make compatible contract for difference. I think contract for difference is a good solution if it's managed in the proper way. But PPAs or merchant should be compatible with contract for difference in order to get the market approach to success in all the scheme. Yeah. And just to finish about speaking about criteria and pre-qualification criteria, specific requirements that could be coming from the governments. I mean, speaking about ESG requirements, about cybersecurity, about recyclability, all these could be part of the pre-qualification process. Yeah, but I would say that should be balanced the cost that is included in the development of the projects and the benefits for the society. Yeah.
Yeah. Yeah. So it's interesting because just listening to you there, it all sounds very bureaucratic, right? It all sounds like there's a lot of things to think about, a lot of things to do, which if you think about does typically add cost and also leads to a situation where there's only a few set of players who can do it. So I get your point around diversifying your sort of portfolio and diversifying your risk, but realistically, if you've got so many other rules in play, let's just say, does that not lead to essentially only a handful, just for simplicity, of players who can actually bid in to an auction because they're the ones who can take up the bureaucratic kind of angle that you're describing there in some respects? I mean, what's your view on that? Is it going to lead to that? So essentially a thinning out of the market?
Well, I think that the supply chain it's reacting. I mean, the supply chain is trying to adapt to the requirements of the sector. But if you look to the target, your slides were pretty clear. I mean, we are having 100 gigawatts capacity target for 2030. Yeah. We have installed in Europe 25 gigawatts in 12 years. Okay?
A little bit more, but yeah.
So it's pretty clear that it's impossible to deliver 100 gigawatts. Yeah? And probably this is losing some credibility from the point of view of the supply chain. But I think that we need to support the supply chain in order, because otherwise all the risk of the supply risk on the promoters is impossible, it's too much. Yeah? So I think that we need to support, like other countries are doing, states, for example, if finally there is no political change in the States, let's see what happens. But according to the reality we have right now, I think that we need to make our mind and that we need a supply chain that continues being leader in all around the world, that is supported and considering the support that others are having in other countries. Yeah.
Okay. Yeah, we'll come back to supply chain, I think, a little bit in just a minute. It's an important topic. So obviously that filters through. But just from a developer perspective, Emily, I mean, you're working in a different jurisdiction typically than maybe the majority of developers in that sense, and you're dealing with a different leasing system. You're dealing with an open system in Sweden, as an example. So how do you think about essentially what Javier's described just right now in terms of a very structured sort of process and non-price factors and all those sorts of things, and then a kind of essentially a non-centralized system that you have in Sweden? I mean, how do you weigh those up in your mind?
Well, I think the big leasing systems have played a very important role in bringing offshore wind to where it is today. We've seen costs go down, we've seen technology advancements that we didn't foresee a decade ago. So I think it has played a super big role and will continue to do so in some markets. But if you look at the markets, Sweden and Finland, where we're active, Sweden is completely developer-driven. There's no centralized system, basically. Finland has both an open door and a leasing system in play. And I think there is a benefit in some of these markets to continue to have this. Sweden and Finland are countries which have historically had, we don't have any oil and gas industry. We haven't really exploited our continental shelf fact in either of these countries. We tried to, but we didn't find anything. So the legislation and the knowledge of our waters are basically not at the same stage as they are in Norway or UK or the Netherlands or Denmark. And therefore, I think we need to approach it differently. And if we want to bring all these emerging markets into play, I think we need to acknowledge that these countries are different, they work differently, and the key to untapping their potential will not be the same it has been on the other markets. So I think, therefore, we need to look for diversity. We need to acknowledge that diversity will also play a key role in bringing the industry forward and delivering a lot.
One size doesn't fit all. Okay, that's very interesting.
One size does not fit all.
Yeah, indeed. Is anyone, I mean, if anyone's got any other views on this on the panel, right? Please do pipe up. And did you want to say something? Or?
Yeah. I think it's interesting this discussion and actually the how you structure the panel, because it's actually very diversified. You have OX2, you have Iberdrola and Total Energies and PGE. So it's really different entities with probably different business model and objectives and different ways of approaching the risk. So what we discussed this morning about from our colleague from EGER about the size, the volume of offshore wind coming in front of us, this 50 gigawatt to be tendered next year, even if I think it's a lot, but around 50 gigawatt. Actually, you have offshore wind for everybody. You will have offshore wind for utilities, you will have offshore wind for oil and gas, and you will have offshore wind for small developers. And when I say oil and gas, it's maybe probably restrictive. What I would say is more integrated company. So our business model is based on more risk taking approach. We are used to acquire a seabed lease, make drilling exploration, and then take all the risk, and then you have a big reward linked to a higher risk. So high risk, high reward is clearly what we are looking after. And lease auction, which is the system developed in Germany, Netherlands or Denmark, is very well suitable for us, because we take all the risk. We have no subsidies. It's a purely merchant project, and then we have to take care of these electrons and find the money elsewhere. And that's what we are trying to do at the moment, building a fully integrated chain of conversion of these electrons with H2 methanol, supplying electricity to our refineries, EV stations, and as well using our trading hub. And now we are entering into the second phase, gathering a volume which is sufficiently big to trade. So today we have reached 70 gigawatt of secured pipeline of not only offshore wind, of multi-energy renewables. Offshore wind is 15 gigawatt, but we are trying to have more. And then we complete this pipeline with CCGTs, hydro plants, and now we are at the second stage of gathering other resources of electricity to be able to sell multi-energy PPAs, base load, to our clients. And the money will not be made on offshore wind, but on the overall offer we can make to the clients. So it will be completely different from utilities, markets where you have no access to electrons, CFD like in France, where it's locked for 15 years and you cannot play with it. It's not for us. We are there because it's our country, so we are still in. And having a bit of CFDs in your portfolio, it's still okay. But overall, our objective is mostly to develop the countries where we are able to take more risks.
Okay, so that's an interesting point, I guess, overall then is again, we've taken typically a very government-led discussion here about what should a lease round look like based on what we're trying to achieve in a government. But what you're kind of saying there, and I hear, I guess, from you, Emily, as well, is well, it kind of depends on what your corporate strategy is and what you're trying to achieve as well, right? So we should be realistic that different companies will do different things in different markets, not just based on what the lease setting is or whether the country's objectives are, but really what your own objectives are, right? Because you have a strategy, you have shareholders, and you have things that you need to get done. And we'll probably see Total Energy, in one part of the world thriving and doing great things and never meeting a Iberdrola along the way, and then other times you'll meet up because your stars align. But actually, realistically, going forward, maybe there'll be more of a divergence in terms of players who take part in certain license rounds. Yeah.
And those which are at grid parity and not. Of course, when you are not at grid parity, you need CFDs to help your system, like floating. And floating is a different ball game. We are in floating for different reasons. to mature the technology. But there is a bit for everybody, but we should not, and we know that Wind Europe is lobbying against this negative bidding and lease auction. We are clearly favorable to that because it's our business model. We can accelerate the business, the bids, and the deployment of offshore wind. We take the risk on behalf of the governments. And when we discuss with the supply chain is saying, we need your volume to invest in our new equipments. The T&I contractors, today when you discuss with them, they are telling you that today they are taking the profits because they have suffered so much in the past of delays and so on. Their vessels were not occupied. They had this transition from oil and gas into offshore wind. They have lost a lot of money. Their shareholders now want return and dividends, so they are stopping investing in new vessels, in new builds. And to be able to go to the next step, they want to have developers with a sufficiently large size of projects to be able to invest in new equipment. So they are counting on us. Today, we can help them more than before because we have we start having a project to develop, which was not the case a few years ago. Now with Germany and New York and round 4, we start having projects which are sizable enough to offer a volume to our suppliers, and with that they are investing. We help them in investing and supporting them. We take them on board quite early in the phase, and we can deliver the offshore wind like that.
Okay, super. So let's come on to supply chain because it's been sort of hanging over, and we should be talking about it. And Andreas, I'd like to come to you first, if I may. The question is how do you ensure essentially that there's enough investment in the supply chain going forward, right? And so far what I've heard is you need scale, predictability, etc. Again, that sort of whittles you down to just a few players in theory who can really make that commitment and that happen. But you're an individual who's actually spending time trying to help these guys make some money along the way and make these investments happen. And so circling back to that question, how do you actually ensure that kind of investment actually happens?
Yeah, I think the supply chain industry at scale for offshore wind is actually quite young industry. And the financial markets and the banks are not that familiar with these assets. So it's taken a lot of time to understand it as well. But it's a lot of doom and gloom, but we also need to just also recognize that the supply industry actually has quite positive outlook in the offshore wind value chain. There's a lack of assets, tremendous amount of investments that needs to be done in larger equipment for the larger turbines, vessels, cranes, monopile equipment, infrastructure and ports. So there's a lot of investments that needs to be done. But you're exactly right that you need to see cash flow visibility in order to attract equity capital and not at least bank capital. And that's been the problem very much in the construction phase because as a contractor, you only get the contract for one project, and that might be phase 1. And then it takes, as we all know, a very long time before that project matures and get to FID. But now we're seeing also that the suppliers are getting contracts even before FID, and you're also getting a longer backlog. But again, there is uncertainties in these contracts to what extent they can be cancelled or postponed if FID decision is not being made. And that is, of course, important for us as bankers as well. How do we value the risk in these contracts and how can the companies build a backlog on it? So lack of visible cash flow, that's been kind of a hindrance to attract capital. We're seeing that backlog is improving, and you're also getting more banks into the sector, and we have just arranged a couple of deals with broader syndicates now. That is positive. I think also another point is the technological risk, and particularly how do we know that the assets that we are financing are fit for purpose in the future? Do you build large enough to take, say, the larger turbines, or have you invested too big equipment and then you stabilize on a certain level? So these are very difficult questions, and you don't have time series to really evaluate what will the residual value be. And I think also the redeployment, single project risk, we have observed on some areas, what happens with this cancellation in a big project for all the sub-suppliers, how are the cancellation clauses, etc. But these can be solved, and there's a young industry, and there's almost a triangle, right, where the suppliers, they need cash flow visibility to invest. The developers, they need positive return on their equity in order to deploy a capital to develop a wind farm. And of course, they will not develop a wind farm if they cannot sell electricity for a cost that is not mitigating the investment cost. And that goes back to the auction system again for the government, right? They want to see lower price for the electricity and reduce the amount of public spending into the auctions. So it comes back to how do you design an auction system that can absorb these risks at an optimal way. And I don't think there is one answer to that. You mentioned some of these points already, but it's not only money, it's also how can the risk be reduced, how do you handle inflation risk, how can we reduce the time, improve, everything that is increasing the overall cost and the interest rate sensitivity in this project, as so much of the investments have to be done upfront in a way.
Yeah, yeah. There is something, if I may, there is something that, the credibility of the tenders that are coming is really important, yeah? We saw on Monday the announcement of the North Seas Cooperation Group that is putting together all the auctions are coming next year. But everybody knows that this is not achievable, yeah? So we need to have binding objectives. I mean, if you promise to deliver a project, you need to be delivering, okay? Because it's the way of giving credibility to the supply chain that needs to decide about how to deliver, yeah? Because on the other side, we are having governments in Europe that are investing for grid connection, yeah? And that's an unfair competition, if I may. Because a TSO can invest and he's warranting the returns, yeah? Not the developers, yeah? And they are interfering in the market. They are buying cables, they are having DC connections, they are somehow interfering in our work, yeah? Okay, it's the market and we will do competition, but in the end, if on one side the government is committed to deliver on a specific date, the developer needs to be committed for that, yeah? So if we commit now for the year 2032, it's almost 10 years, yeah? The supply chain is telling, okay, I'm not ready to take the risk, yeah? So somehow indexation, for example, and these tools that are helping to mitigate this risk, yeah, are really helpful. I mean, France, Ireland are looking for this kind of risk. The problem is that the increase of the cost in the supply chain, I know, maybe in 1 year, the cost of the CapEx have increased 20%, yeah? This is not just because of the cost of the life, or it's more, yeah? And if you put other problems associated to skills, this morning the European Union was mentioning skills. Many companies are lacking, missing CVs, people properly trained to develop projects, to deliver, yeah? Port infrastructure. How we put in order all this? How we coordinate all this? Keeping the market rules playing, yeah? Because in the end, you cannot interfere in the economy, but somehow you need to settle some input to the market that is putting everybody working together for the same objective, yeah? Otherwise, the credibility is not working. I mean, again, we are aiming 100 gigawatts for 2030. Everybody knows it's impossible. We are trying to do our best. Let's see what we are able to deliver.
So if I was to ask a slight question back to a developer then in that sense, should you therefore not, when you get a lease, automatically get a CFD or a price at that time? So probably the issues you had, the debate. Because you're essentially going in and saying, I've done some early economics, I kind of know what I can make on this, but to give everyone a guarantee, I know what pot of money I'm going to work with, so I'll get my CFD now, just creating a bit of a nice debate here. And then also essentially be forced to deliver by a certain
Yeah.
timeline.
Yeah.
And in that way, you know what pot of money you've got to play with and what your timeline is, and then your supply chain can invest. What do you guys think about that?
Well, that's a good question. Yeah, I would say that in this moment, with the uncertainties in the supply chain, probably a two-step approach is useful. I mean, similar to UK. So you have the site, you can investigate, you can mature, you can get comfortable about the grid connection, about the PPAs, and in the moment that you are ready, you go for the contract for difference. But that approach is requiring many sites and a big portfolio of opportunities. You cannot do this in any country, yeah? But I think that if possible in this moment, that's helping. I mean, you need to be closer or to put closer the decision for the investment to the delivery date, yeah? Otherwise, somebody needs to cover the risk, yeah? I mean, if we are able to define a way of covering the risk of the contract for difference from the moment it's awarded up to the moment that you take FID, that's another solution. But it's really difficult to implement. How you have an open book approach to the authorities and you are reviewing your tariff based on your costs. In theory, it could work, but in practice, it's crazy, yeah?
Okay, so let Andreas have a...
I just think that historically you could bid in for a fixed price and you could expect a cost reduction over time. So it's kind of a favorable position to be in for the developers, not so much the suppliers. But you know, if you turn it around, are you really willing to bid in a fixed price and not knowing your cost base going forward? And that's a challenge, right? So I think what we discussed earlier today as well, and here is how do you create risk sharing or partnerships more long term between the suppliers and the developers, because they are in this together. And here I also think you need larger entities and consolidation that we see in the industry, so that you don't have single project risk, but you have a portfolio of projects, and you can develop these projects at different maturities and different, call it regulatory risks or other risks that might affect them. And also that you have more efficient utilization of the assets that you have to invest in. And you all know there's a lot of waiting for weather and conditions. There's harsh conditions to develop offshore wind. So how can you ensure that when you have not able to do work some places, you can reallocate assets? And I think that will be even more important as we go from just Europe to 3 basins, and where the context for this discussion is Europe, but also Europe will have to compete for the assets that might be occupied elsewhere as well. So I think consolidation and risk-sharing partnerships will be very important in this industry going forward.
Okay. Emily, sorry.
Yeah, we tried at OX2 actually to bridge the gap between the developers and the supply chain and have partnerships with EEW, NKT, and Hitachi on supplying our projects and making offshore wind happen in Sweden. So I think just trying to not be in the same positions as we have always been will also make it favorable. And I don't have the deep pockets as some of the other developers who can book a vessel for a number of years, but I can be transparent on what are the roadblocks and what are the hurdles we need to jump in order to make these projects happen. So that also can create some certainty with the supply chain. And are these projects going to happen, and when, and to what extent should they be involved in different phases?
Perfect. Okay, and Andreas, just in terms of the emerging market that you're sitting in, I mean, how do you compete against some of the big guys in some respects then, and ensuring that you actually get the investment that you need?
But sorry that maybe that won't be a direct answer to the question, because
Fine.
this discussion is very interesting, and in one way I am happy that the problems are global. It's not only ours, yes, whether it's the market is mature or whether it's emerging market, yes. And you saw in Poland there was a big interest of many companies of so-called second phase. There were 11 seabeds. It were given, if I can say so, to Polish utilities, as you are in France, we are in Poland, but now naturally we need to get partners for foreign companies which have very good know-how, but also access to finance and access to suppliers. Yes, so it was interesting what Andreas was saying to me, because I'm saying more or less that we as investors, okay, we have our challenges, but the challenge is with the suppliers. There is the bottleneck. Yes, there needs for cheap guarantees also for them. Yes, I'm all the time being asked about some things when I have to answer. In some ways, not my problem, yes? Like TSO, transmission, harbor, I don't know, something else. This is not my job, yes? Of course, to secure supply chain, it is my job, yes? But how I can help them to make sure that it is fine for them, because we have, for now, pretty secured system. You've asked about this CFD. We have CFD agreed on the EU level, yes? Now, okay, there are these auctions plans for 25, 27, 29. The volume is known. I'm not sure if it's the best system, yes, still, yes, because we will be competing and we will be squeezing, again, the prices. And I agree with Javier said, what was said, that then, again, we will squeeze everything and take the risk altogether. And of course, we don't want to have in Poland just those projects on the chart. Yes, we want to make them happen. But still, I would say that one perspective is investor. I'm investor, but perspective of supply chain. You have very nice chart how much came from Europe. Yes, I saw that cables were this lower number of percentage, but let's look what PV market done, yes? Let's take the lesson learned, yes, from that. So, of course, we also very much appreciate if there is some local content in Poland, but the industry is not known that it's not so easy for the tier one, so easy, but it is also an idea, yes, to support investment in the supply chain, yes, like Windar, Spanish came to Poland, Vestas came to Poland, yes, some others. This is also very helping, yes, to make sure that we will not have the gaps in the offshore business. So that's why I think the emerging markets like Baltic Sea, so also Estonia, Latvia, they are also important.
Absolutely. Yeah, they're going to be fundamental to reaching the target. So very important indeed. Okay, so we're running slowly out of time. Apologies, it's always the case in these types of debates. Anyone have any questions, short questions, for our panel at all? They haven't solved the problem, so there's definitely some questions. Just behind you.
I just have a simple question, because everyone starts to be comfortable about missing the targets. But what about COP28? And is everyone getting comfortable that we just don't reduce emissions? Total Energy continue with a mixed portfolio and invest in fossil fuel. Iberdrola, I think you are a little bit responsible for the Siemens situation. You talk about the supply chain for a long time, but look where Siemens is. If we don't invest in the supply chain, you won't have offshore wind. If we don't have offshore wind, we don't have a safe planet, right? So where is the objective of saving the planet if Vattenfall, Shell, Iberdrola, Total Energy get used to the idea that we can miss the target?
Yeah. Well, I can tell you that from Iberdrola point of view, I think that we anticipated all this and all the projects. I mean, we are building in this moment 3.5 gigawatts capacity, investing 8,000 million euros up to 2026. Okay, so we keep our promise. Yeah, I agree with you that we need that kind of commitment because we have a problem that we cannot forget. I'm totally agree. Okay, but the reality we have is that in this moment, looking to the back, to the story and what's coming, it's impossible. And we continue in Europe speaking about the strategy when we need to take actions. I'm totally agree with you. Okay, we need, I don't know if industrial policy, but we need to take actions and start moving, yeah, because the targets are being lost, yeah.
And
Total Energy among the oil and gas is one of the leaders in the energy transition. You are one of the leaders.
and we are.
Is in Time magazine. If the leaders don't believe we can make it,
We believe we can make it. I didn't say that, and we are not missing the target. We are not missing the target. We just want to have more leads to develop. Our problem is to win more, and as well to convince our shareholders to accept more ambitions, because we set a target of 100 gigawatt by 2030. It's huge. It's the biggest ambition in the market. And our shareholders from the US, 70% are Americans. They don't believe so much into that. So we have to convince them they have to use the money from oil and gas to the transition, and the transition is profitable, and it is. We are demonstrating that we can make profits out of this multi-energy portfolio. For that, unfortunately, we have to continue to produce fossil fuel, less and less. We have ambitions to stop oil and convert first to gas, and then stop gas, and then only electricity by 2050. So this transition is there, and hopefully we have the funds from the oil and gas and the gas to finance this and to take more risk than others, support the supply chain, and not miss the target. So for the moment, we are looking for leases to develop, and then we will develop.
Okay. It's flashing red. Thank you for that, and thank you for the difficult question, Philippe. Obviously, these guys will be around for the rest of the afternoon. Please do ask them some more difficult questions, but thank you for listening, and please put your hands together for the panel.
Okay, thank you. Thank you, David, and thank you, panelists. Boy, did you cover some ground there. Fascinating stuff. Moving along, we're in Norway, as you may have noticed, so it's only right that we should spend a bit of time talking about the Norwegian offshore wind journey, where it is and where it's going. And that's what we're going to do right now. No one better to do that than Arvid Nesser, who is the CEO of Norwegian Offshore Wind, and Arvid's going to join me on stage now for a quick discussion. Do you want to sit there, Arvid? Yeah, great, welcome. Thanks for joining us.
Yeah, thank you for inviting me.
Not at all. So, Norway has a target to have allocated 30 gigawatts of seabed by 2040. Currently, there is some capacity in the water, courtesy of some early innovative floating wind and the Hywind Tampen project, but we are in the early stages of large-scale tendering. 1.5 gigawatts for the Utsira Nord zone, which will be floating wind. Now that tender is currently on hold while some issues are sorted out with the EU state aid authorities, and 1.5 gigawatts in the southern North Sea, which is going to be fixed foundation offshore wind. So that's a brief introduction as to where we are. Very quickly, Arvid, introduce yourself and your organisation, and just this may seem an obvious question, but Norway is blessed with very abundant hydropower, green electricity, and you've also got quite a lot of onshore wind. So why offshore wind in Norway? So over to you.
Yeah, that's true that we have been blessed with hydropower, and I think until for a couple of years ago, it was a common opinion that we had a lot of hydropower. We do not need to do anything, but that has changed. And we see now the last years a lot of reports, both from Statnett, from the Energy Directorate, and from others. They state that we need to have more electricity into the system. And it's not possible to build much more hydropower. You can do some upgrade of some of the existing, and so it's we have a lack of electric power in the Norwegian system, and onshore wind is very difficult to do more of. It's a strong opposition against onshore wind in Norway. So, and then offshore wind is the most likely way to cover the need we have now for more electricity in the market. And I think the last report now from DNV this week stated that we need most of this 30 gigawatt. We need it into the Norwegian system.
Yeah. Okay. So there's a genuine demand there. I mean, we'll maybe come on to some of the industrial benefits in a while, but let's just quickly talk about where we are with the tenders. I think people will be very interested in this. So, as we've said, Utsira Nord is on hold, hopefully not for long, while these negotiations with the EU authorities continue, and it's now a little bit behind schedule. And the southern North Sea is proceeding, and we saw the announcement of 7 consortia or companies who are interested, and your government will now look at them, and I believe, if I got this right, they're going to aim to pre-qualify formally at least 6 of those. Now, if it falls below that, there may be an issue. That's, as I understand it, correct me if I'm wrong. So, where are we with the tender? Let's start with the one that's actually ploughing ahead. Where are we with that tender? Is it a worry that some of the bigger names in offshore wind, who were actually making very positive noises and actually forming alliances and consortia beforehand, they haven't shown up? Are you happy with where the southern North Sea tender is at?
I would say that I'm not surprised that there is no lower interest for southern North Sea than earlier expected. We have received a lot of signals during this autumn from that it's very complicated to get southern North Sea. I know we have this 7 or 6 in real maybe, but they have still not committed to participate in the auction. So for them, it's sort of an option to apply for pre-qualification. So we still need to see what's happening in the auction. And southern North Sea is complicated because it's far away from the coastline. It's expensive to develop southern North Sea. And originally, it was a hybrid project with a cable both to Norway and to the European continent. And now when it's a Norwegian project, it's quite complicated and expensive. But I'm hoping for that we will see that it will be a bidder that will be going into the auction, and we will see that it will be built. Because it's also important for the Norwegian supply chain to have some bottom fixed projects. But Utsira Nord is even more important for us in Norway because the industrial ripple effects are much higher for Utsira Nord since it might be the first floating project, maybe the world's first full-scale floating wind farm. And the industrial consequences in Norway will be very important for that.
Yeah, I mean, we'll certainly come on shortly to floating wind, because I know that's a subject that's as indicated you rate very highly as a strategic priority for Norway. Just staying on the tender briefly. I mean, it was widely reported, and we know we'll hear from them. There's a Chinese company has indicated it is planning, or at least interested in bidding. And that's the subject of some interest, scrutiny, and debate at a European level. What's your reaction to having becoming effectively the first major kind of European tender in offshore wind to attract the stated interest of a large Chinese player?
First of all, there are some national security issues, but that's not my part so I have no opinion about that. But if we look into, I must say that I see this as a signal from Mingyang that they are interested in going into the European market. And actually, I'm a bit surprised that they haven't come before, because already in 2014, we had at Metcenter, our test center in West Coast Norway, we had a project with Mingyang and a Norwegian foundation, Ovec Tower. That project stopped for several reasons, but that was a clear signal that Mingyang has an intention to go into Europe. So, and that's close to 10 years ago. So I'm a bit surprised that they haven't come before, and I see this as a signal that they are now coming into Europe. So, yeah.
Okay, so it sounds to me like you're kind of sanguine about their participation in the Norwegian process, along with everybody else. Okay, well, let's talk about floating wind. I mean, Norway's a pioneer of the pioneer of floating wind. You floated out the first turbine, experimental turbine, 2009, am I right?
Yeah.
Okay. Equinor, our friends at Equinor, have built the first commercial offshore wind farm to use floating turbines off Scotland, and now they're pioneering again with Hywind Tampen, connecting up to oil and gas. So, floating, why is, in your view, floating such a key opportunity for the Norwegian sector?
Yeah. I think there are several reasons for that. First of all, Norway missed the first round with the bottom fixed. Norway were occupied with oil and gas projects at that time with the first line. And some companies in Norway were early movers, like Fred Olsen, and they still have a large position. And we see that the companies were early movers for the bottom fixed are still the dominating companies. And now with floating, Norway sort of get a second chance to be a, and also it suits very well the competency we have now from oil and gas and maritime with operating installation in deep water, harsh weather facility, and like that. So it suits very well with the Norwegian competency and knowledge from the oil and gas sector. And another interesting aspect with floating in Norway is also the possibility to develop ports. Because for floating, you need deep water quay sites with space in water and space on land to produce and to have an intermediate storage of them. And then you will need a lot of port capacity. And Norway has, this port capacity need to be sheltered areas. And Norway have had all the fjords with very deep water. So we have a sort of nature-given possibilities also to develop the ports and the production facilities needed for floating wind.
Okay, so a good fit in a number of ways with floating. I mean, you've already said that Norway was a kind of late mover, generally in terms of deploying offshore wind at scale. Although Equinor was a pioneer, its pioneering tended to be over kind of my side of the North Sea, off of East Anglia, and fixed bottom. We haven't seen anything yet. So when you look around Europe and you look at the kind of we've been talking just now. There's a frantic debate still going on about, what's the best way to reward development, to incentivize development. What are the best structures that for leasing of seabed or power procurement? There's all these debates from markets that are way down the line. Do you think Norway is showing signs that it's kind of learning the right lessons from what's happened in Europe already?
Yeah, I think so. And especially the CFD system has been developed and has been now a success. And Norway has adopted the CFD system. And I think the next challenge now is also to have the consenting, have a smooth consenting processes. And we see now EU has that on the top of their line on the headlines too. And I think also Norway need to be there. Then we need to look into how to have sort of smooth consenting processes. But I must say also, Norway has something also to bring onto the table, because we have a lot of experience with coexistence from the oil and gas sector, coexistence with the fishery, coexistence with environmental issues. And there's a lot of learning from the oil and gas sector there as well, Norway can bring to the table, for both for Norway and for Europe.
Yeah. I mean, we have seen some we have seen some slippage in the timetable already, and we've seen at least one big project cancelled, Trollvind. I mean, are these kind of early teething pains that really, in the long run scheme of things, you're not too worried about, or are they something that investors will get slightly nervous about? What do you think?
Yeah, I think it's it's interesting now. But back to Utsira Nord. I think now for Norway it's very important now to get a smooth line there and get the companies interested. Have the system, have a compensation system available for Utsira Nord.
So that's what's going to get the confidence, is to have this smooth runway and very predictable. Yeah. Okay. Great.
And I can add on that we see some delays now on Utsira Nord.
Yes.
Because the discussion with ESA about but I'm quite optimistic, because Norway and EU has the same targets here. We need to have fast processes but I think for floating, the problem now with floating is that you cannot start an auction now because it's not mature enough.
Right.
But maturing it and convince ESA that you need to mature the projects a bit before you have the auctions.
Yeah.
I think that's obtainable.
Yeah. So if I'm fairly summarising, some early bumps in the road, but the direction of travel is promising.
Yeah, I'm optimistic.
Yeah, good. Well, that's a good note to end on. Arvid, thank you very much for your insight into the Norwegian market, and please leave the stage now. Thank you very much, and I will welcome that. Right. Thank you, Arvid. So, it's time for our next panel. Our business model is adapting to meet the challenges of cost inflation and ambitious new rivals, and this is all about our wind turbine OEMs, without whom we don't have an offshore wind industry. So could I welcome on stage now Carsten Merker from Mingyang Europe, Geoffrey Dupuis from Vestas, Bjorn Simonsen from Worldwide Wind, and Han Hansen from Fred Olsen Wind Carrier. Please join me, gentlemen. Thank you. Thank you.
Shall we just go down?
Please keep going. Right. So, welcome. So let's set the scene. We've heard already today some discussion about some of the issues we're going to tackle here. I'm sure about the scale and the ambition of turbine makers in relation to the supply chain. But I would like to start with Carsten, if I could, from Mingyang. I mean, we were just talking just now that you have put down your marker to take part in the Norwegian auction. This is, I think, caused a lot of interest, and I think it's fair to say some debate in the European industry. So could I sort of directly address possibly some of the questions that have been raised about Chinese participation in the European sector? And then maybe we can also talk about exactly what you've got planned for Norway. You'll have seen some of the comments, and I should be clear that these have not directly been made about Mingyang, but they've been made about Chinese OEMs generally, from Wind Europe, amongst others, the European Wind Body. Chinese OEMs have no place in the European wind sector. Chinese OEMs are doing business on unfair terms. Chinese OEMs are, in some cases, using unfair finance means and offering inferior products, and they are a threat to European security. So these are kind of big charges that have been laid against Chinese wind turbine makers. Could I ask you how you respond to these kind of quite severe comments from the European wind power sector?
Yes. Yes, then I would need to take those item by item, actually, basically. Maybe starting with, or maybe if you look at our wind farm that we have in operation in Italy, basically. This is a project financed, a regular finance project according to Wind Europe European standards. So it has been financed in a way that basically other offshore wind farms in Europe have been financed before as well. Yeah. So there's basically no kind of state subsidies or anything alike behind it in this project. And going forward, Mingyang is first of all, Mingyang is a private company in contrast to many of our Chinese competitors, which are state-owned. So we are listed on the stock market in Shanghai as well as in London since last year, and so this means there's certain accounting rules and a certain transparency is given. So basically, Mingyang is not directly supported by the Chinese state. So it's basically in this regard basically on par with other European OEMs. And then you mentioned this security threat. That is, in my view, mainly a technical one. It is actually, there are technical ways to mitigate these concerns. For instance, by kind of disconnecting, or basically in regards to the data stream coming from the wind farm, right? This may land next to the offshore wind farm in first place at the data center of the utility or wind farm operator, and then you may from there, as you probably want to benefit from the central data surveillance that is being done in our headquarters in China for the whole fleet. You may then subtract certain data and only pass these data on to the central surveillance center in China. So, in my view, there's a technical solution for this.
So
this
you would be, yeah, that's really interesting. So you would be prepared to kind of submit yourself to a kind of technical fix, sort of to ring fence this data within.
You could say so, yes. You could say so, and only send data one way to China, which are really needed to do the kind of predictive maintenance and these kind of features, these kind of benefits that you gain from kind of observing the whole fleet globally.
Yeah. I mean, this is so ultimately, I mean, you reject the charges that are laid against you, and you say that the cyber threat, the security threat, can be addressed. So why do you think the representative bodies of European wind power are being so forthright about this whole issue at the moment? Are they worried about some competition?
I think this is probably better a question for them directly, right? I can only speculate.
What do you think? I mean, you must read this stuff. I mean, we've written it, and it's been written, and it was in the Financial Times today that Chinese wind turbines are the next great sabotage threat. I mean, why do you think this stuff is being?
There's a lot of stakeholders in the industry with different interests and different lobby objectives.
Yeah.
And of course, lots of it is obviously against OEMs from China coming into the European market, as we can see. Although actually what I can also say in this regard is actually in the offshore wind industry it is already today a very global industry, right? And when Mingyang coming to Europe, we will also we are planning a manufacturing facility in Europe.
Yeah.
We will source towers from Europe. We are sourcing many main turbine components from European suppliers, like the main bearing, for instance, or electrical components. We will have a big footprint doing installation, commissioning, and service. So when a player like Mingyang comes to Europe, there will be a lot of local content.
Yeah. So you would build. You anticipate if you can achieve what you want to achieve in the European market, you anticipate having a turbine factory in Europe and all the things you've talked about. I mean, you would become part of the European industry in the same way, maybe.
Exactly.
In the same way, GE,
exactly,
American company, has factories in the EU and does business here.
Yeah, likewise, and this has already understood by Mingyang quite in the beginning when we launched our European office in Hamburg 3 years ago, even before Ukraine and all these issues. It was understood already in the very beginning as a kind of requirement.
Yeah.
For entering the European market to be here present with manufacturing.
Okay, I mean, let's just before we move on, I mean, let's address Norway. I mean, you're on the list. I assume that you've expressed your interest and you think that you have a chance of being pre-qualified for this this tender. You're down to do it alone, I think. I mean, there's nobody else on the list. You would develop this project, would you, if you were successful?
This is very much related to basically we are trying different ways into the European market, and this is one idea too. And the background really is mainly that we are trying to secure some volume, mainly for the plan of establishing European manufacturing. Because in this regard we need some long-term perspective, and this is one idea how we are trying to secure commitment and volume early in the process.
So we can expect to see you in.
It does not mean that you will not see Mingyang as a project developer entering in Europe as well. This is not our plan. This is specifically related. This will be basically limited to this auction, or maybe we try one or two further, but we do not have plans to establish Mingyang as a project developer in Europe.
Okay, look, really very interesting. Thank you. Okay, Geoffrey, Vestas, a very European wind turbine maker. How does Vestas feel about competition from a big Chinese OEM on your doorstep?
Yeah, I think there's different angles, right? There's one about the size of the turbine, which I think we will get to later, because I think those guys are the ones that
we will certainly.
Exactly, right? Those guys are the ones that have the biggest turbine so far announced, and the other one is about the actual competition itself. Before answering this, I think I would like to say something that I just come back from Beijing after 4 years, right? Spent 4 years for Vestas in Beijing. So I've actually witnessed the Chinese market over there. 2020 when we had the expiry of the FIT tariff for onshore, and the 21 for the offshore. And so I want to connect that to the fact that I do understand that there's a bit of a topic when it comes to having a bit of the Chinese guys coming into Europe, right? Given that specific market, the specific companies, and the China speed and all of that, right? I think they've installed, I think, more than 70% of the market in 2020, and in offshore, I think double digit, probably more than half of what we've done so far, like 25 years, I think Javier was mentioning before. So just to say that I think as a context, I think it's a bit interesting, right? Then on the Chinese competition side, I think we do see the Chinese as a normal competition, right? I think this is not my place to kind of comment on the competitor per se, but we've seen the Chinese market, of course, growing very fast. We've seen those guys becoming bigger and bigger, and of course, this is the next step that they're coming to Europe. We do see two things that we do believe that Western companies have an advantage over the Chinese. And I think one of them is the higher value over the lifetime, compared to the Chinese, where we see having a lower capex at the beginning, as an upfront, and then we are seeing a higher capex, but hopefully going all the way to the 30 years lifetime. That's something that we believe is a bit of an advantage. And the second is the increasing or the growing requirements on the non-price criteria, as we talked about a bit before. This is something we believe that the Western OEM have a bit of an advantage when it comes to sustainability, working conditions, and cybersecurity, and all, right? So I think that's what I'm seeing for these guys, right? But otherwise, I wouldn't be able to make a bit of an assessment otherwise.
Okay. Well, I mean, let's tackle our second big topic where you may, I believe, possibly have divergent views.
I feel like it's a.
We've talked about it this morning, and we heard it, and we have Fred Olsen Wind Carrier here, who will be able to give us a view soon from their side. But I mean, Vestas has been absolutely clear for some time now, and has banged the drum very loudly that enough is enough, and that you have your 15 megawatt flagship, which I've been inside it in Northern Denmark. It's a magnificent machine. It's it's absolutely enormous, and it's enormous enough for the time being. I'm summarising, I think, fairly Vestas' position for some of the reasons that we heard about this morning. The supply chain needs time to consolidate, and it needs time to invest with certainty, because, of course, when we talk about power of turbines, what we're also talking about is just sheer size and how much more difficult it can become to actually physically handle them. So I hope I've summarised your case, but on the other side, could I put to you, I mean, by all means make it yourself, but could I put to you the fact that surely offshore wind has thrived on innovation, and not least Vestas increasing power and size has brought fantastic benefits. So where are we? Make the case.
Yeah, no, that's fair. But I think in order to develop a new product, we need money for that, right? And that's the reason why I think we want to pause right now. I just want to come back to the point you made. You're fully right. I think we've been very clear that we're stopping at 15 megawatt. For now, we do not plan on focusing on any other product for the foreseeable future. I think one point that maybe we didn't mention also before on this, just coming back on that, is you're right, the supply chain, I think, and I want to quote someone from Nexens this morning, High Hill or something, I believe, when they were talking about this ecosystem of the supply chain, right? Of course, and I want to hear also Hans later on that, but there's also the cost benefit side of things, right? I think I would say we don't have the full answer, I guess, but we're getting closer to a point where I think the cost scales up so massively that I think it outweighs the benefit also of the actual value that it adds by having a bigger turbine. And I think this is where we're also saying that we need to post that and make sure that we're getting that done before we go further. And just also a reminder, we talked about it this morning, I think it's a positive point. GE doing Vineyard and Dogger Bank, US and Europe, but this is just prototype. You know, in Rotterdam, we have less than 10 turbines each installed, approximately. I mean, Siemens hasn't produced a full turbine itself either. It's only prototype. The same for us, right? We just got our 2 gigawatt FOI this year. So I think it is just to, you know, kind of bring back to this point. It is very important that we need to get this working very well before we are going forward. And then you're right, of course, it doesn't mean that we have to stop here and it's the end of offshore wind. I think we will definitely get bigger at some point, I imagine, right? But I think we've forgotten how different offshore is, how big of a beast offshore turbines are compared to onshore, right? On an onshore side, we've seen that product life cycle decreasing over time. I think maybe from 6, 5, 4, 2 years sometimes, right? And I know we paid a price in China specifically on Vestas for a lot of reasons, but on a specific turbine. But I mean, we're talking about a 10 times bigger, you know, nacelles. We're talking about a double the megawatt rating. We're talking about it is a. I just transitioned from onshore to offshore. I've been in the industry for 10 years, but I just transitioned to offshore, I think a year ago after I came back to China and from China. And this is I wouldn't say nearly new industry, but this is a different, you know, way of doing things, right? Everything that is not turbine related has a huge importance, right? That's what I want to hear from these guys after, when it comes to vessels, when it comes to foundations and all, right? And we cannot apply the same mindset as we had on onshore. And I think that is very important. And so it takes more time to design, it takes more time to test, it takes more time to install, and therefore it takes more time also to get the return back from that and have the return on experience also, right? So it's not about stopping innovation and R&D. We are working with, you know, suppliers to get some partnership in place to improve some of the things. We are also looking at, you know, how do we, you know, we've divested KK wind solution also because we identified that also this is something that, you know, they should be taking care of and they will be doing better and faster. So I think that we're still looking into innovation and accelerating R&D. I wouldn't say accelerated, but making it better. But for that, we need the money. And in order to have money, we need to be profitable, right? Okay. And I think that's a bit our stand here when we're trying to get into that direction. This morning was very interesting also to hear from some of the, what we call a customer, of course, developers and all, about their view on that. And I think we have a bit of a consensus. But so I'm very curious also to hear a bit more from Hans on the side.
We will. I just want to bring, just before we do, and we will, I just want to bring Carsten back in. I mean, I heard you talk on this subject in Manchester last year. Mingyang, you know, Mingyang's been very open. It's got no intention of at the moment anyway, of stopping development and power and size of your turbines. And since in the last few months, we've seen some new announcements in that respect. So address the point. I mean, address the points that have been made. I mean, you're not helping the supply chain to plan by constantly upping the ante in terms of the size of the machines you're producing. Why are you doing it? What's the kind of rationale?
That is actually, we see this mainly as demand driven by the market rather than supply driven, basically. It's not so much the turbine OEM who's kind of setting the bar and creating a machine at a certain size and is trying to push it into the market. For me, it is rather a market that is defining a demand. So it's basically the project developer who's considering all the parameter related to the project. What is the project location? What is the harbor infrastructure? What are the ocean criteria? How is the financing? What are the costs of capital? What is the kind of risk criteria in this regard, et cetera, et cetera. So there's a lot of parameter being taken into account by developers, and this finally translates into a kind of demand towards turbine OEMs. And for me, this is the kind of momentum where turbine size is being defined. So if this is moving forward, we will see larger turbines. If this is kind of going a little bit slower, we may stick to what we have today and consolidate the supply chain.
Yeah, I see. Okay, well, look, without further ado, let's take the discussion on. Hans, from Fred Olsen Wind Carrier, you know, you and your peers in the installation market are the ones who actually have to invest in the vessels to put the turbines in that these guys produce.
Yeah.
Where do you stand on this?
Well, that's a good question. I think the key is that we lift something that's heavy and we transport and lift and install things, but it's not really the rating of it that's important for us. It's more the weight of the individual components. And in the same way that other colleagues here in the market have reiterated earlier, what happens is that when many years ago that we were going to build our vessels, we went to the market and asked them what's the right sizing of an asset for us to build. And we got the feedback and built the vessels, and it turned out only a few years later we had to increase the leg length, change on the crane. Now we are changing the cranes as well to stay competitive a little longer. So the first investment as a ship owner in this industry is not the last one. It's more like you're getting into the game and you have to follow it. So what's the you can say there are two different philosophies, if you want to, in the market. As a ship owner, you typically see an investment as something you can depreciate over 15 years, have a small residual value, and then you do something else. But here, the growth from your demand side or from your client side is simply so different from what you're doing. And even today, when we're looking at the assets that are coming onto the market today and for which we were discussing new building contracts a few years ago, we have to say that sometimes it's a blessing not to make a fast decision, because you have assets that are coming in the market now that essentially are on the border, and that's a very tough one to sit with as a ship owner, because you have the asset for the whole lifetime.
Yeah.
And it's good you get a contract for a sizable period, which could be 3 to 5 years, but that's still only a fraction of the lifetime of the asset. So there is a dilemma there that we need to somehow address, and there's only certain elements that we can stretch in terms of technology by, beefing up what we have invested in. I don't have the answer for that, unfortunately. I can just say that it's probably one of the reasons why you do not see that ship owners are just flocking to the market. You see some ship owners that are investing, but it's a very big structural challenge to address. And when we see the number of turbines getting into the markets now, so when the OEMs are investing in new factories, you have to consider that for that number of turbines that get into the market, you need a sizable fleet of installation vessels to install it. And some investments are happening, but not to meet the growth that we are anticipating.
So, I mean, we've heard a lot about a vessel's shortfall globally. There's going to be the OEMs and the developers are going to be fighting to to get their hands on what does that chime with, from what you just said? It does, that there's going to be, we're facing a kind of bottleneck of vessels, because we've heard the targets. The targets are huge. The factory, the factory building, the volumes, the scale of the turbine, just the numerical number of the turbines. Does it all point to a fact that the vessels market is going to become a bottleneck for this industry?
It looks like it, and that may sound like it's a wonderful place to sit in as an owner, but that may only be for a short period, because of the uncertainty of the sizing of the assets. That's one aspect. Then on the other side, we as an industry, we are always talking about the world excluding China, and that goes for both turbines, but also goes for vessels.
Yeah.
And in China right now, albeit for the domestic market, you have in the area of 30 plus installation vessels under fabrication, and they are probably not relevant as it is now for the global market, but it shows that there is a vast capacity also from yards that we would not consider as ship owners bring to the market. So there's a good likelihood that we will see a number of competitors on the vessel owning side come to the market, and they may use assets that are of a different specification that we want, but again, it's what the market wants, and they will go out and take some parts of the new markets.
Right.
Then we're sitting in our old Western world with our set ideas of the world, and we do things in a certain way, and then we can hope that we are equally agile, so we are able to still keep or get a good part of the new markets. But I think it's likely that we'll see like a split in the market, and new owners enter the scene.
Okay, fascinating stuff. Okay, I'm going to bring in Bjorn from Worldwide Wind. Welcome. Now, these guys may not agree on everything, but I suspect one thing they might agree on is that for the foreseeable future, a wind turbine will be like that. And for those of you who aren't familiar with Worldwide Wind, they are developing a very, very intriguing new concept of turbine for the floating wind sector. And I hope I've got this right, contra-rotating floating wind. Check it out on their website. We've written about it in Recharge, so look at it there as well. See some images. It looks nothing like the machines that these guys are making. Now, I suppose my question is, in an era when we're told that standardization, proven technologies, predictability is all, you're bringing something incredibly new, or trying to bring something incredibly new to the market. Why, and how difficult is it?
Well, the why is quite simple, and we're talking about all the challenges on the cost, on the value chain, on scaling, and there's a simple reason for that, because the technologies we're trying to move out into the ocean, they're built for standing on solid ground. We're taking that technology, we're putting it out in a liquid environment. Of course, you have complications throughout the entire value chain, and you need to build a new value chain even to support that. So, while the horizontal axis turbines, they're just as suited for floating on water as a sailboat is for moving on land. So while you can put wheels on a sailboat to move it around, it still doesn't make it into a good vehicle, right? So you need to think different when you move into a different environment. And we're coming to a size where there's challenges on land for horizontal axis wind. Vertical axis is the ugly duckling of the wind energy. Obviously, it has a lower capacity factor on land, but it has some characteristics which give you some fantastic benefits moving offshore. You have the heavy part of the turbine at the base, not in the top of a big tower. And the design that we have made, it also tilts with the wind like a sailboat. Imagine how sailboats would look like if they were to sail perpendicular to the wind at all times. And that's pretty much what we're trying to achieve with the horizontal axis turbines. We're compensating for the lack of land with large floaters of concrete and steel. And I'm probably provoking some people here now, but that's, we are a newcomer, we are a challenger, and we believe we need to think differently to truly succeed offshore. And I see we're running out of time, but just to give you a few numbers, we can accomplish the same number of megawatts with half the steel and half the concrete, roughly, of the solutions that are being put out into water today. And I'm sorry to say we probably won't need any large installation vessels to install our wind turbines either. So,
Not a problem.
I'm not trying to put you guys out of a job, but
then we just build another vessel. Don't worry.
It's the industry is so big that most likely at some point we'll probably work in the same company.
Well, I mean, how are you going about? you know, you've got to convince developers to actually use this this technology at a time when, as I say, I mean, the whole thrust of the industry is let's rely on what we know. Let's not take risks with the energy transition. You know, let's make sure it's insurable, financeable, scalable. And how are you going to get this thing to any sort of scale at all?
Well, number one, we need to show that it works, right? Seeing is believing here, especially with new challenge. I was about to say challenging concepts. It's a challenging concept to develop also. And we're not just a PowerPoint company. We have our prototype. It's been manufactured. The mechanical elements, we're putting in the electrical elements. We're getting it out in the water, either right before or after Christmas. So let's say sometime January. And that will prove that it works. And then who are going to bet on this? Maybe it's not going to be the big leaders that get all the projects they want. Maybe it will be the challengers also on the wind development side that see, well, I don't have the advantage maybe in scale or in other elements. Maybe I can sidestep everything with a new solution that allows me to use less resources to build these turbines, and I can also put them closer together with an added risk of having a technology which has not been tested. But then again, a much bigger reward.
Okay. All right, well, let's see. Look, we are a little bit over time, but it's been a fascinating panel, so I do want to just very quickly see if anybody in the audience would like to ask a question. I can see Philip Kavafian behind. Yeah, there we go.
You mentioned the steel or the cost per megawatt, but I think we produce and we sell megawatt hours. So I remain very optimistic about offshore wind, because when I look at the penetration of the power production in Europe, the offshore wind share of wind energy is growing because the capacity factor at sea is much bigger. So if you take your megawatt analysis and you transfer into megawatt hour, do you think you still have a good ratio of steel and simplicity to bring to sea?
Yes, and obviously we need to, because otherwise, why on earth would you invest in a company and a concept like ours? For sure. So we see that we can come below the levelized cost of electricity of horizontal axis turbines plus floaters with a good margin.
Do we have any more questions for any of the other panelists, or are we? No? Okay. Right. Well, I think it's been an excellent panel. I'd like to thank you all. There's some rank speaking, and yeah, please join me in thanking our panelists.